Your strategy has to involve your mindset, and your strategy then involves the actions that you take to move you from where you are to where you want to be.
I'll start with what Visa isn't, right? Visa doesn't issue credit card. We don't issue credit. So Visa doesn't do that, which surprises a lot of people.
We'll use a phrase like, well, things changed, but things don't change. People change things. All the legislation that has been passed, somebody advocated for that. And so International Women's Day is to commemorate that history of women making change.
Several of the banks have started to migrate their existing debit card portfolio to chip and pin EMV technology. So the SMEs are going to benefit from a wide range of customers who previously did not have a credit card, but only had a debit card.
Today, our guest is Tanya Stuart. She's the Chief Risk Officer at JMMB Group of Trinidad Tobago. She's a seasoned banker, so she's more than qualified to have this conversation around money, because it's so important, because she has over 20 years of experience within the financial sector.
I'm from Barbados. I migrated to Trinidad over 14 years. I've been in banking since I was a teenager. I started when I was 19 years old. And a good example is when I started banking at 19 years old, I remember I was approached to take an insurance policy. And I was like, insurance? I'm 19. I don't need insurance. I'm young. Why are you even selling me insurance? But do you know that insurance policy came with a whole litany of financial advice? I was also able to get shares with that policy from Sagicor, which I have today. And do you understand and know that that's over 20 years ago? I'm not going to tell you my age, but shares that I had at 19 years old that came with my policy, I have today. And that has grown exponentially in terms of the dividends I was able to get, the capital appreciation, and the fact that I still have those shares and they're earning for me. So that's just a bit, an example in terms of my, whole delve into financial literacy.
What advice would you give to a parent right now during this time? Because, you're in a position where you're stressed. Things are coming from all sides. People might be thinking, oh, you're working from home, the kids working from home, you're saving money because you don't have to have gas and you don't have to actually buy things that you usually do with the outing. What advice now would you give to a parent in that position right now?
Right. So the advice I would give is first to understand your expenses. Although you may be home, it doesn't mean that your expenses are decreased, because the consumption principle, you're using more electricity. These little ones home, so they're consuming more. Some persons would have depended on the school feeding program. You don't have that luxury anymore, because it actually was a luxury for some. So for some persons, the expenses may have actually increased. So the first thing I would advise parents is to really understand what are your expenses, what are your needs, not wants, what are your household needs during this COVID period. And you can start with a simple budget, meaning just sit down, write down, this is my income, and these are my expenses, these are my needs, these are my wants, and how can I look at my consumption pattern to see if I can, try to save some in these areas, or, in terms of my kids, if they're doing online classes, they are dependent on the internet, electricity. After that, they would need some kind of entertainment. You look at the consumption and look at the usage and see where you can maximize and look to cut down where you can. Of course, everything within reason. TNT, I'm not sure if persons know that if your consumption for TNT is $300 or less, you actually get a 25% rebate. So those are the kind of things that you can work towards, and it's eligible. Every single person who has an electricity bill, they're eligible for that rebate, 25%. But it is due to your consumption. What is your consumption pattern? And the only way you can know the cost of your consumption is to sit down and write your budget and then review it to see where you can save. And in terms of children, explain to children the value of money. What is the value of money? That things cost money. Is an exchange, it has a value, and get them into that pattern, that in order to get something, to purchase something, you have to purchase it with money, and money has value. So that is something else that you can teach children. And also get in the piggy banks. This is your savings, this is your allowance, this is your piggy bank. From this you can buy X amount of stuff, and get them into that whole savings pattern of understanding money, the value of money. First thing, understand your financial goals. What are your goals? Short-term goals and long-term goals, right? So when you understand your short-term goals and your long-term goals, then you're able to say, I'm able to plan to reach, towards these goals. So financial literacy is about understanding the macro environment, taking that knowledge to be able to make informed decisions, and to inculcate that discipline and the correct behaviors, which would allow you to achieve those short-term goals and long-term goals, right? And you also touched on something as well, very important, which is understanding. It's not, some persons saying, oh my God, financial literacy is as simple as saying, I want to purchase a car in 1 year. What is the price of this motor vehicle? And look and see how much I need to put towards achieving that car. It's also looking at different YouTube channels, Instagram, different forums like that, getting the knowledge of there. We're living in the information world. Information is readily available on YouTube. So take advantage of the information that's readily available. Going to your banks. Banks have financial advisors. They can sit with you and also explain the importance, of having some financial knowledge and discipline. But the one thing that I would like persons to first understand is you control your entire financial ecosystem. So the first thing you have to do is to be able to understand how you earn. What is your income? For some persons, they're salaried. Some persons, they're not salaried. And you also touched on that for self-employed persons. So first, understand how much money do I make? Get a firm understanding of that. When you do understand that, look and see what are my fixed costs, what are my needs, what are things that I need to survive, what are things that I need to pay. There's actually a rule. For some persons, the rule of thumb is 50% of your income goes towards paying your needs or your fixed costs. 30% would be for, entertainment or other things that are not as, important. And 20% you could put towards your savings. But that's just a rule of thumb, but whatever fits within your financial goal. So those are the kind of things that I would advise persons to look for. Understanding how you earn, understand your expenses, and then break it down into how do you achieve your financial goal.
Welcome back to the Straight Off the Bat Facebook Live series, a show that covers the need to revive and survive to this normal, because I don't know if it's new anymore. We're here with Tanya having a conversation around money. And when it comes to your credit card expenses, something that we don't necessarily have how to, can you shed some light, Tanya, on during this lockdown, what are some of the tips that we should be aware of as credit card holders?
Right. So the first thing is to understand your credit card limit and your interest rate, because credit card debt is the most expensive debt there is, because it's basically like an unsecured loan, right? And you're paying on average sometimes 2% per month, which adds up to about 24% on an annual basis or more. It depends on the credit card, right? So you really have to look at the usage. What am I using this credit card for? And is it something that I could pay within the short repayment cycle, because you have a 30-day payment cycle. So some persons only pay the minimum payment. That's not doing anything to your credit card debt or your credit card limit. So the first thing I would advise is understanding your limit, understanding the interest rate you pay. Look at your usage of the credit card. Is it being used efficiently? And then how you're able to repay the credit card greater than the minimum payment. Also, you could look at restructuring your credit card debt. You could go into your financial institution and say, hey, can I get an unsecured loan, or can I get a loan and hive off that credit card exposure into a loan, so you can start repaying principal and interest and bringing down that credit card debt at a much lower interest rate. The next thing you can do is use the credit card to your advantage, because you get points, and you can then use those points and go into the various merchants that have ties to the credit card, and start using those points to pay for your goods and services. That's also going to help you save on your income. So use the credit card to your advantage. I'm not saying that a credit card is a bad thing to have. In some cases you could use it like for emergency, if you need to pay a health medical bill or something. But look at what you're using it for. Is it a need? Is it a want? Is it something on the spur that you're using it for? Is it really something that you need to have right now? Can you save towards that goal? So those are the kind of questions and tips that I would give. But the most important one is to understand the interest rate, understand your credit card limit, and understand exactly how much you're paying and your minimum payment. That's not doing anything. So if you can repay the credit card in a shorter space of time, depending on if you have the disposable income, you can do that. Or if you know that I really need to manage this debt, you could go into your financial institution and see if they can convert that credit card debt into a loan, and you can start paying towards the reduction of that balance at a much lower interest rate. And the next thing is make that credit card work for you in terms of the points, so you can redeem it instead of using your actual cash.
When it comes to paying that credit card, sometimes I wouldn't opt for the cheaper option because they don't have a credit card, and I think, okay, I'm gonna get the points. And I want you to give advice to my future self and those out there who may be able to relate to this emotional attachment to those types of payments, and the reasoning we give ourselves when we have that credit card in hand and about to make that purchase.
Right. So the first thing is to be real with yourself and ask yourself, is this a need or is this a want? What value is this going to add to my life? Is it going to add an economic benefit, or is it just going to be something I consume and just put aside to look pretty in the household, or I buy a pair of shoes or a dress that I would only wear once? Really evaluate the value that this purchase is bringing to you, right? If it's not adding any future economic benefit, or if it's not for a medical benefit, to enhance your health or something along those lines, that I would advise can assist with that emotional attachment to your credit card and utilizing that credit card to make that payment. It's an easy way to make a payment if you don't have cash on hand, but just know that the long-term impact is going to be more detrimental to you economically and financially, rather than, rethinking that purchase and saying, maybe I could buy this thing with cash at a later date. Maybe I could save it for it. Maybe I don't need it right now. What is the value that is going to add to me and my life in the short term and long term? So an emergency fund is a fund that basically has about 3 to 6 months of your expenses covered, right? And that fund is utilized in the event of an emergency, but an emergency to different people may mean different things. So for me, I have my 6 months emergency in the event that I need to pull that trigger and I wouldn't be getting my monthly salary, that I can exist and pay my expenses for a maximum of 6 months. So that's the benefit of an emergency fund. Some persons start small. It takes a while to build up that emergency fund. It may take a year or 2 years, but I would always advise to have an emergency fund. The different tools you could use towards saving, you could look at utilizing your financial institution, You could look at a short-term investment like a mutual fund. It pays interest, is easy to liquidate in the event you need to use your emergency fund. You could get that type of advice from your financial advisor. Some persons use SUSU, some persons use their credit union. Whatever is available to you that makes sense, that is paying a return on those savings, is easy to liquidate in the event you need to use it, and you have access and understand the value of the emergency fund. I wouldn't say it's a secret. I would say that some persons are empowered, some persons are bold, some persons, that health, that social, the impact on their health is more important to them than continuing into a space that's causing them stress. So they would decide, okay, I'm going to take a 6-month break. I utilize my emergency fund to, reset, level set, work on myself mentally, and then put myself back out there into the working environment. A good tip that I can also give though is have an accountability partner, meaning in terms of your budget, have an accountability partner in terms of your spending, and have an accountability partner in terms of that same emergency fund to ensure you're utilizing it for the reason that it was designed. So that's the next good tip, that I could give to you.
Is there any advice that you have for individuals who may not have been brought up with the familiarity of having those conversations?
Sure. So we have to normalize having those type of conversations. So that's the first thing. So as part of the curriculum in schools, I strongly advocate that financial literacy is part of the curriculum, So you have to start normalizing having these conversations. You need to also surround yourself with people that are open-minded, open to give the advice, and have free-flowing conversations about finances. You also have to have a different type of mindset and say, I don't understand, I don't know. Can I either one, educate myself by, going to the internet, looking up some of these YouTube channels, going on Instagram, or reaching out one-on-one, reaching out to persons like myself, to back, and having a conversation, reaching out to your financial institution. We have account managers, we have financial advisors. So, taking that first step to boldly say, I'm going to seek out the information. I'm going to normalize, seeking out that information, and I'm going to use that information to the best of my ability and to my advantage.
But that was like my first experience with money. Very, very first experience.
I've been in banking since I was a teenager.
So welcome back to the Facebook Live series. Straight off the bat, we are here to learn about financial literacy. Where should we actually start when it comes to your business? Because, we read all these self-help books. It sounds great, but there's such a huge part of entrepreneurship that's quite boring, if I'm going to be honest, that we need to really address. So where would you start? What would be the top things in terms of a to-do list for an entrepreneur and money?
Right. So the first thing was to understand your product or your service. Understand how you are going to sell that product, market that product, understand your target market, understand what is your value proposition, what's going to encourage me to buy from you, and then look and see how you could push that to your target audience. Look at your expenses, look at your operating efficiency. Operating efficiency is basically how much of that dollar of revenue you're making is going towards paying your expenses. If I'm making $2 if I sell a pencil and my expenses is $2.50, I'm making a loss, right? So really look and see, one, am I pricing my product correctly, or are my expenses too high enough? Can I reduce my expenses? Understand what are your variable costs that goes into that product or service, and understand what are your fixed costs. And then when you understand those things, how much units of the product or how much of the service do I need to sell to cover those expenses and make a profit as well. So those are the kind of things that you would have to understand. Look at how you finance your business. Is it going to be by a loan from your family and friends? Is it going to be from the financial institution, or is it going to be via equity? Are you going to give someone a portion of the business to have as a shareholder? So there are different options that could help you start your business, finance your business, but each has pros and cons. So let's just look at equity. You can have an equity partner. They can inject money into your business. You have a specific shareholder. They could probably own 10% or 20%. Depends on how much you want to, sell them. But it allows them to get dividends, and they may be able to have a say into the business. It depends on if they're a silent partner or not. But the thing about that, equity allows you to raise money by not going to the financial institutions and incurring debt. With debt, you have to pay back with interest. So, and there's a fixed payment every month or every quarter for a specific period of time. Or you could go to your friends. You could say, hey, again, that may be debt, and you may not have stated repayment terms, but you also have to see, okay, how am I going to repay my family and friends? So the things that I would say is look at your target market, understand your product, understand what goes into producing and selling the product, look at your expenses, look at your operating efficiency, and see how best you can finance your business.
Let us know why it's important for you to include a salary into your budget.
Right. So time is money, right? And your time is important. There's sweat equity, and then there's your input into the business. Also, you must be able to have a clear idea of what are your monthly expenses, including your remuneration, which is your salary, because that then allows you to price your product properly when you have a full understanding of all your expenses. You also have personal expenses. You may have rent, you may have a mortgage. You as a person and as a business owner, you have fixed costs as well. So you need to have your monthly revenue to be able to pay your own specific fixed costs, your personal costs. And then in terms of the actual remuneration, which forms part of your expenses for your small business, it allows you to plan for the future. Plan how you want to grow your business. Plan how you want to take your product to that next level, because you have a firm understanding of what are your expenses. So those are the key things that I would say is very important to ensure that you pay yourself, and then you are valuable as well. So you have to make sure that you are getting the benefit of the value that you put into the business. I'm not saying to pay yourself an exorbitant amount of the revenue, but pay yourself enough to the value you put into the business, to be able to understand, the total costs of the product or service, and then you as a person also have, your personal expenses, and to be able to contribute to your personal household.
What should we look at? What is the list we need to make before we take out a credit card in the hopes that business will pick up, because it may have slowed down because of COVID?
Right. But my question would be, what is the value? What's the benefit of using the credit card? Is it to keep your business open? And when you keep your business open, is it adding or greater value to your business? So the first thing I would say is try not to utilize a personal credit card for your business. Don't commingle, with something we call in business is commingling, which is utilizing personal funds for business and likewise. But that's hard sometimes if you're a sole trader or you're a small partnership. So to be able to distinguish, your sources of funding your business and, try not to utilize your credit card to fund your business. Your business is a standalone entity and it should be separate to your personal expenses. Look at additional funding sources. So if you need to keep your business open, you can look at utilizing debt. If it is required, a working capital line, you could probably, look at some retained earnings of the business to utilize. But I would want to understand the whole concept of having the business open if it is not quote unquote making any money. So you really have to assess, why am I leaving the business open for this specific period of time if it's not bringing in the revenue that I expect. So it's a greater conversation, in terms of just financing the business, but am I in a position to leave the business open if it's not generating any income?
What advantage do you have to go in debt, and what should we be mindful of when we do that?
So as a small business owner, look at what you're financing and what you're borrowing for. If I'm borrowing to invest in my business and I'm borrowing for an essential item, which is going to contribute to more sales or it's going to contribute to increasing my product, that's a good thing, right? So the first thing we say is that is not a bad thing. Is one, are you using it efficiently for the business purposes? And then there are different types of debt as well. There's loans, there's working capital lines, there's overdraft that you can utilize as a small business owner. I will also advise to shop around because interest rates right now are low. So take advantage of low interest rates as well. Go to different financial institutions and compare, the different interest rates that are being charged, the type of structures for the specific business. Also, there are different financial institutions that give added value. There are SME resource centers. There's tips and tricks that they have on their website that allows you as a small business owner to benefit. So I would look at the overall value that's being added from that financial institution, because sometimes they're not only giving you a loan, they're giving you resources to help you towards your business as well. And then you can shop around and utilize, different interest rates, lower interest rates to fund your business. But that in itself is not bad. It's the value that's contributing to your business. Utilizing technology is a great way that you can save actually on time, money, and effort, because you can utilize your online banking platform. It allows you to, one, set up your monthly payments. So you can actually have them set up and you don't have to remember every month to, pay this bill or pay a loan. So you can utilize that platform, and that is actually free. You can also utilize that platform to get your statements. Sometimes if you want paper statements, it costs you, but you can actually get these statements on your online banking platform. You can just download those statements to your laptop or view it on your phone. So again, you're saving there because you're not paying for physical statements. You saving time because you don't have to go into some place to pay a bill, or you don't have to waste your time to really understand how much I owe, because it's already there programmed into the online banking platform. And you can send payments using what we call the ACH, or automated clearinghouse, or what we call RTGS, which is just a fancy name for wire transfer, right? Real-time gross settlement. And sometimes it costs either as low as $2 or as high as $65, depending on how fast you want the payment to go. But from bank to bank, interbank transfers are becoming so normalized. Sometimes it doesn't cost anything, or it costs as low as $2 to send money from my account to your account if we are two different banks. So really utilize those services that are available on the online banking platform to save towards time and fees, account fees, rather than going into a bank, waiting in line, standing up. Also utilize the ATM. The ATM, you can make deposits in the ATM, instead of going into the line. So there are different technological systems at your fingertips to readily assist you.